And if you take a seat, give me a second. Trying different forms. See my kids start nice and then you get.
We are recording, so like this. Just so whatever you say, it's probably gonna be.
Thanks, guys. For those that don't know me, I'm Sean Surak. I am a manager in the Rhode Island area. So never had a relation with our office. I've probably been involved in some respect. I want to thank you all for coming today. We have a great opportunity. Greg Hall is our national renovation manager. Greg and I have known each other for 15 years almost. Yeah, he looks more and more like Guy Fieri every day, but this is not Thunder's Drives and Dives. There's food, but not for that. Greg has solely for, he's been at primary since 2008. There was a stint before, I guess. But he is primarily focused solely on renovation loans. So his entire career has been around, this aspect. And he is by far an expert in this subject. He calls me once a month and says, Sean, do you realize you live in the oldest part of the country? All the houses, all our inventory is old. This is not Arizona. It's not the West. We have, properties that are 1800s, 1900s, and a lot of them are falling apart. So he asks me constantly, why aren't we doing more renovation? Because I think a lot of it is it's either not knowing about it or there's a stigma. So we're here today to kind of give you just a little bit of understanding of how the process goes, and also to simplify it. There's some changes coming out in November, which Greg's going to go through, that are beneficial, especially to us in this area where it allows for a little bit more financing to get this job done, especially with the added cost of construction. So I want to thank you all for coming. Before I hand it over to Greg, I wanted to invite you all next Thursday to our office. Fall, what do you call us, Lauren?
Realtor Fall Appreciation Event.
Fall Appreciation Day.
Woohoo!
It's great. Very casual. Come by, stop by the office. There's food, drinks, music. We'd love to see all of you Thursday at 5 o'clock.
Way to go, Sean.
So, guys, you're going to join him. Greg Hall, thank you guys again for coming.
Not as loud as Sean. Thank you for taking the time to come out today. I actually traveled I am from Baltimore, Maryland. I drove up last night. I've been in the mortgage industry, just to tell you a little bit about myself. I've been in the mortgage industry since the mid-90s, and I've done it all. Literally originating, processing, being managers, had my own offices, and started with primary in 2006. Started with primary in 2006, and from there, I rolled my branches, and I rolled it into the Mid-Atlantic division. Things were good. I was ops manager. I was always dealing with the renovation, but not to the capacity I am today. About 10 years ago, my corporate office came to us and said, "You guys want to take over this program? Because we really want to get it up and running. At the moment, we're just selling a 203K limited program. And we were selling to Bank of America. They don't do that anymore." And the bottom line was, I said, sure, and I was excited, and I sucked. It was the worst experience I ever could possibly imagine. From that, I'm a guy that likes challenges. I've taken this from literally being so terrible, being one of the top lenders in the country, renovation financing. You're completely in-house. We do every agency renovation loan that's out there, so you're not going to hear me talk a lot about programs as a 203K or Fannie Mae Home Style or Freddie Mac Choice VA or USDA, because that's our job. But we are going to talk about renovation in general and how it's going to help you get it, sell it out on the street, get you a little bit more confident in what it's really all about. Because I've understood through the years from doing many of these, people just don't understand what renovation is all about. So let's just start here. What is renovation? Construction. Can you break ground? Yes and no. You can't break ground to build a new home because that's considered construction. But if you have an existing home and you want to break ground and put an addition onto it, you can upgrade anything inside your house. Put your roofs on. We've actually put second floors on homes. Sky's the limit. The thing is, you just have to have a current home. And the max benefit of renovation financing over any type of financing is that we give max financing on the after improved value. Meaning, when we go to order your appraisal, we're going to submit a bid to Mr. Appraiser and say, hey, what is this going to be worth after all the work is done? They're going to give us a value. We're going to lend you off of that value, not the purchase price. So you don't have to have any repairs done prior to closing. Seller doesn't have to pay for anything. You basically close, and the repairs done as if the house was already complete. Also want to mention, if anybody has any questions, please raise your hand, say something. I'm a casual guy, just with everybody else. So we'll start off with a positive note. What are the misconceptions of renovation here? They never close. If they do, they're a nightmare. They're too expensive. They're going to ruin my relationship with my clients. But truly, what it's all about is most people don't understand that. So they kind of skirt against it or they'll give it away, and you just don't have to. And it blows my mind how many people still do, because you're truly losing out on a really positive. It's been around for longer than you and I. Let's get into the nitty-gritty. So let's talk about the whole purpose of renovation. You've got to figure out the puzzle, and that's needs and wants. So we got to figure out what a house needs compared to what your client wants. And this comes at us in many different angles. So you could have someone who wants to buy a house, and maybe that house has needs. Maybe they want to buy a house and they just want to put in new flooring. They want to paint it, a new roof, whatever the case may be. That's your wants. Sometimes they have wants and then it needs needs, or however you want to chalk it up. That's what we do. We figure this out to help you get into that house. We also look at the challenges of the marketplace. That's where I got into the needs. You order an appraisal, you have someone's buying a home, all of a sudden, I know every person in this room has probably had this happen, where the appraisal comes back and there's additional repairs that are needed. You got to figure out, hey, is my seller going to be able to do these repairs? If not, what am I going to do? You have a buyer who almost loves a house. But driving them around, you're looking at 15 different homes. There's nothing on the market these days with no inventory. I love this house, but I don't like shag carpets and pink toilets. whatever it is, it just needs a facelift. Might have some good bones, so utilize renovation for that. Properties are moving condition, and as I mentioned earlier, lack of inventory right now is a popular subject that's out there. So a lot of people don't realize, I always state renovation is a staple. It's not a niche. I actually posted it up there. I don't know if you can see it, but the FHA 203K program has been around since 1978. So a lot of times people think, hey, you know, this renovation product is going to be in and out, it's not going to go anywhere. Since 1978, it's going nowhere. It's the only program, renovation, not FHA. Back in 1978, back in the 80s, 90s, there wasn't such thing as conventional renovation or USDA renovation. So never ever think that renovation is a niche product, because it's not. It's something that you really, as an agent, even if you don't want to sell it, you have to understand, you have to know about it, because it's your option. The example I have on the screen here again, you order an appraisal, it comes back with repairs. You have three options. One, the seller can fix them. You have to get a final inspection done before you can close. Two, your borrower can pay cash, which isn't going to happen, or otherwise probably not talking to us anyway. Three, you can do renovation financing. So I don't know how many of you have been in situations where you're driving people around, you're trying to find them a home, but I don't like this home because of this, because of that. One. Simply, something simple as that. So I did a little research. Sorry about that. Did a little research yesterday about Rhode Island in general. And one of the things I found, Rhode Island is different, Sean mentioned earlier. Right now, Rhode Island's housing pricing has rose 7 to 9% within this last year. It's been rising, as you can see over the time. Pricing rose over 13% just from 2023 till today, which is wonderful. The rent has also increased by 16% over this last year, which is a good thing for us being in the mortgage industry, because now rents are starting to compete with mortgage payments, and that's, everybody sees the ads. Mortgage. But the problem is, you have a lack of inventory like everybody else. So the supply and demand, I'm not teaching you anything you don't know, I'm just stating the facts. The supply and demand is there, where prices are going up, people are building equity, but there's no homes to buy. One thing was really interesting, I don't know who this person is, the Speaker of the Rhode Island House of Representatives, Elise Sharaki, said, unfortunately, Rhode Island does not have enough housing supply to keep up with the demand. Too many years of being dead last in the country for new housing permits, is called it. So I'm assuming there's not much new construction going on in Rhode Island. So where does that leave you? In the renovation realm. So if you want to, and I'll be the first person to tell you, everybody wants to buy a move-in, shiny, already built home that has no repairs done to it. That's not always reality when it comes to that. So I always say on a national basis, because I'm a national guy, one of the things that we're dealing with here is aging housing stock. Now I put this slide on every presentation I do, because people don't realize that over 50% of all the homes in the United States are over 50 years old. So everywhere you go, there needs to be renovations done. You, fortunately, live in the mecca of the oldest homes in the entire United States. So unless your current owners are updating these homes on a daily basis, there's always a case for someone to be able to renovate their home, whether it be through a purchase, through a refinance. Obviously, as agents, you're not finding a lot of refinances, but I've actually had sellers do a refinance, to update their house, then put it on the market, because they didn't want to wait for a buyer to come in that way. My realtors actually tell sellers to do that, and they've just gotten a transaction a couple months down the road. This was interesting. I don't even know why I put this in there. I thought it was kind of comical. Square footage. There's a square footage mismatch in the United States, meaning that we collect too much junk. Basically, the square footage of homes are smaller than the junk that we actually, well, I shouldn't say it's all junk. Goods that we buy, that we like. Talking about. But ultimately, there are record levels of home equity out. And this is why we are so busy in the renovation market right now, because of lack of inventory, tons of equity. It basically means, how do I put that perspective of renovation? You have a seller who has things needed to be done in their home. They don't want to or have the money to update that home. So they have a lot of equity, which leaves an ease for them to lower their sales price, enable for the buyer to come in and renovate that. So it's like a trade-off behind the scenes. Because otherwise, the appraisal might not come in. You're not. You guys gonna be okay this way too, or is it like?
Yeah.
Okay. That's better. Thanks. I don't like carrying that thing around. Okay. So, anyway, so first of all, anybody have any questions right now?
There a time frame for when the work will be?
Yes. Yes and no. So they're gonna post that you have it, depending upon the program, it could be anywhere between 6 months and 12 months. Companies arise, if you don't hit that, it's the exception, you get an extension done. I've never seen an extension. They just don't want, agencies don't want. Related supply issues.
Cost of that. Cost of any use.
Yeah, well, so FHA. FHA, the house has to have a occupancy, at least 12 months before they roll out. If Fannie Mae, Freddie Mac, conventional side, you don't need that. We've actually taken homes where the prefab homes, contractor ran out of money, couldn't finish those, as long as it's, you say 90%, I don't think really that 90%, as long as it's almost finished, you actually can utilize renovation, purchase, the home.
That's like a big hesitation that I get from anyone talking about. Oh, it's the paperwork, oh, it's getting the contract.
Yeah, we have, so this is what I, it's an instant. So when we have, FHA standard limit, pretty sure the operation of everything else, you get out for a while. That means nothing to you. So when renovation comes in, instead of having a borrower qualification, you also have a property qualification. Depending upon credit standards mixed in with the property standards, to determine what's the best program. So I always tell all of us, don't sell FHA 2 or 3K, don't sell Fannie Mae home sell renovation, because that's what it's doing. They actually take original loan application up front. For going, actually, we have 0. For the loan closes, we have renovation after it all. After closing, they may be speaking to that, dealing with raw aspect of it. Yes, there's inspections need to be done, contractors have to fill out some drawings. Richard all here, everybody built. Richard's a HUD consultant, he can't handle that, they can build it, but it's not as bad. Not as bad. It's really overblown. Usually, supposed to do. This looks back there, what types of products companies do we? Just went over, we offered every agency. To do these products on primary residences, second homes, investment properties, and eligibility types, single family homes, 2 to 4 units, townhomes, manufactured, eligible homes, flood already with properties. One thing people don't realize, you come get a property and property or down to what, where you want to go. Big thing, second homes, investment properties. A lot of people don't realize finance all this. I will tell you, your rates aren't going to be as great on investment property, but I will. Our agency product, you're going to get a higher loan value than you can borrow. Most contracted investors. Qualifying credit is credit. So sometimes I always get the question, how do I know my borrower could qualify for renovation? That kind of gets back into the needs and wants level we started. So if you can already finance the home. So there's two things. I was always asking, hey, what do you want your mortgage payment to be? How much money do you have to bring the closing? We would kind of back into there. But then we would also back into their case, but we would also break out what they would ultimately qualify for. Meaning like, hey, you go to fit into like a $350,000 house, but you qualify for a $450,000 house. So when you're out on the street, that borrower is going to find a $400,000 move-in ready home. That's great. If they're going to find a $400,000 home with 50,000 renovations, 450 is 450. There's nothing additional. We're still qualifying off the same thing. There's no overlays onto renovation. We're just adding it on, making that home to minimal property requirements or giving them the needs or wants that they want. And believe it or not, you'd be really surprised how many transactions we do that are 300,000-400,000 plus in just the renovation portion alone. There's a lot of people out there. It kind of surprised me. Majority you would see are, I want to buy this house, it's $20,000 to fix something up. And there's a lot of people looking for homes to basically just gut out, add square footage to them, build an ADU, whatever they wanted. This screen, if I'm going too fast, let me know. If I'm going too slow, let me know. Is everybody okay right now? Okay. Sometimes I'm up here talking to myself. I just want to make sure we have a ton of audience. So talking about down payments and money, does it cost a lot more money to do a renovation loan? Not really. I mean, there's expenses involved with renovation loan. There's expenses of putting renovations in your house without dealing with the renovation loan. So all of our expenses, we're not charging you extra just because it's a renovation loan. You need to make more money, but for that borrower, they also need to understand. Everyone gets scared. What happens if we always hear this? I want to buy this house and I'm going to put $30,000 renovations after we close. That's great because you probably have exhausted the majority of your assets buying this house. How long is it going to take you to come up with $30,000? Or if you're going to put it on a credit card, what is your interest rate on that credit card and what is your payment there? Kind of give an example that, now this is a low example, the only slide I had, and a sales price of $200,000, the borrower needs 3.5% down. So they're going to need $7,000 put down on that particular house. If they did $200,000 off the house, repairs, they want to put 20,000 repairs in, you still need 3.5% down on the total acquisition. So they only need $700 more to bring the closing to gain $20,000 to do the renovations they want, because that $20,000 is going into mortgage. The odds of them coming up with $20,000 are probably very, very slim. And this kind of goes across the board, where it said they need $700 extra for 20,000 repairs. Well, they need 1,000 more for 30,000 repairs, 1,400 more for 40,000 repairs. So go in, and obviously that will go up or down depending upon now that they're purchasing that home for. But in general, you think $40,000. It'd be hard for them to come up with $40,000, but it's easy for them to come up usually $1,400, and they can knock out everything they want to do right out of the gate. Same thing goes with monthly payments. How more? Okay, I'm going to put in my mortgage. How much more is it going to cost? But granted, rates change all the time. I don't even know what this rate is, but it's all margin. The payment's $121 more a month. They did $20,000. 182 for 30, and $245 a month if they wanted to borrow an additional $40,000 just for repair. So again, getting into the aspect of someone wants to buy this house, they want to do this big renovation, but they don't have the cash to do it. Financing is really not that much more expensive like anywhere. Here's where we get to some of the fun part. Financing, but what if I have a client who wants to purchase this home, they can't live in the home through construction, it's gonna take them 4 months, 5 months, whatever. They're currently renting or they're currently living in this house. If that house is going to be uninhabitable through construction, they can finance up to 6 mortgage payments through that construction. So they can stay in their current house, buy this house, and actually put the mortgage payments in escrow, which allows them to finance that and not have to make 2 mortgage payments. So that could be a big deal. I want to buy this house, but where am I going to live during construction? Or how am I going to afford to housing payments this time? Another nice fun fact is that with FHA, this is what the FHA 2 and 3K only. Anybody ever heard of the 110% factor that FHA offers? Familiar with that? So this can be a little confusing, but it is a pretty awesome thing. Sorry, that's my real point too. What the part $6,000 mortgage payments. Don't have to go down that. But this is actually a pretty powerful tool. How we factor and calculate our maximum base loan amount with FHA renovation 2 or 3K renovation is this. Say if you had, and this will always come up if the house is going to underappraise. So the example I gave, you have a purchase price of $400,000. They're going to do a $50,000 in total renovation cost, which makes our total acquisition cost $450,000. Well, normally we order the appraisal. Let's just say the appraisal comes in at $440,000. This is the point where usually people go into a cold sweat. Now I got to call the agent, did underappraise, who's going to negotiate the contract. If a seller could be HUD or closure, or maybe it's a seller that cannot come down or will not come down in that sales price. HUD states we're going to look at these 2 different factors and we're going to lend you max financing on the lesser. So we know that our total acquisition is $400,000. We know that this house appraised for $440,000. They're going to say, okay, what's 110% of $440,000? $484,000. We're going to act like that house appraised for $484,000. I'm not going to lend them all that money, but it gets them that full $450,000. Not supposed to promote this, but I cannot tell you how many times I've received a phone call. Ray, I got this FHA loan. The appraisal just came back $10,000 light. I know you talked about this 110% thing. Is there anything we can do? I'm like, yeah, do they want to do anything to the house? I've had one literally that they want to put carpet in the basement. Give me a bid for the carpet. All right, well, your $440,000 appraisal just turned into $484,000 value because now it's a renovation loan, applies the 110% factor onto that. So we have saved a lot of deals, and literally it took maybe a couple hours more time for us just because they have to gain a contractor bid showing you what the price of the carpet or appliances or whatever they want to do. That makes sense? It's kind of a confusing thing, so I kind of go slow trying to let everyone understand. You guys sell any accessory dwelling units or people interested in what an ADU is?
Just the big thing.
Dude, it's huge in our world right now.
The same here, they just passed it.
Yep. It has been, I'm telling you, I've been in this industry forever, as I told you earlier.
Not everyone.
So an accessory dwelling unit, they call it an ADU. I'll just read off my page here. Accessory dwelling unit is a legal and regulatory term for a secondary house or apartment that shares the building lot, a larger primary home. Cannot be bought or sold separately, but they're often used to provide additional income through rent, house of family members. For example, elderly parent would live in a small unit and if we having to move to assisted living facility. Sounds really cool. But basically, an accessory dwelling unit is a unit that you can have attached to your house or detached from your house. We've taken detached garages, utilize renovation to turn it into like an in-laws quarter or a separate unit. We've had people do that case. and rent it out, utilize the rent for qualifying for their property. And this is huge because right now the pricing of housing is gigantic. They really started out in California because it's impossible to live in areas like San Francisco without multi-families moving there, and finding them getting more and more and more popular. So granted, they have to have a separate entrance, have its own kitchen. If you had a multi-unit property, only one of them can be an ADU with a separate entrance. And you can collect rental income. So when you're in a situation, if you have a client who wants to buy a house because they have some parents living with them, it's an elderly parent, someone they have to take care of, or they just want to turn the garage in their backyard into a separate unit they can rent out, or whatever the case may be, you can now finance that into, and it's still considered a one-unit property, not considered second unit, or, and it's, again, this is one of those things that they're new, as Pam was saying. I would definitely research a little bit more. They're becoming more and more popular as people are starting to kind of get the buzz that's going around. You see a lot of increase? More and more. Okay. Out here, it's always been a West Coast thing, but now it's. So that's kind of like a summary of just high level area of this renovation itself. For now, I'm going to get into talking about just the players. Who additional is involved compared to just a normal transaction? Unless someone has any questions. Good. Okay. Need a contractor. Tons of questions. It had to be a general contractor. Does it have to be a specialty contractor? Can I be the contractor if I'm the borrower in the house? We'll start with that. No, up front you can't, but there's ways around it. We're not dumb and we get it. And I always state, you can't be the official contractor on record on the house. So usually, we don't care who's swinging hammers around. We need to make sure whoever the contractor on record is licensed, they're insured, they're taking responsibility of all liabilities and draws, et cetera, et cetera. Whoever they want to subcontract out to, they can subcontract out to. And I use more than one contractor. And you're going to read, no, you can't, but that's a lie because we have actually been allowing more and more in if they're specialty type contractors. So if you have someone that's, just to make it easy, you have a guy that's going to be doing a lot of different things around the house, but then maybe someone's doing some foundation repair, or they're doing a roof, or their septic, or HVAC, something's completely separate. Yes, that borrower can have multiple contractors to do that. Now, you can't lay out 6 contractors in front of us, and the borrower's going to be their own general contractor. Doesn't work that way. There's around. But our approval list is really easy. We don't have an official approval list of contractors. Now we have access to contractors all over the nation. So if your client said, hey, you give me some referrals, I can't endorse a contractor, but I can say, here's a list of some that have worked. This industry done renovation financing with us, and why don't you give them a call? They fill out an online form. They have to have a license if you're state. I don't know if Rhode Island needs a license. I think you do.
Registration.
Yeah.
You need to be registered.
Gotcha.
Yeah.
So that's all we just ask for the same thing that the state allows. W-9, they have to carry $1 million worth of general liability insurance. And if they have workers' comp insurance, great. If not, they fill out an exemption. We don't approve them to say you can do this work because we say so. We just make sure you are legally able to do it. The borrower typically falls out. One thing that we do step in, we have to make sure they understand the terms of how they're getting paid. So we've had some situations where, like, look, this is $100,000 renovation. This is what we're going to disperse at closing. This is what you're going to be responsible for. We've had people say, I can't do that. I can't afford to do that. And unfortunately, we can't approve you because you're going to die. And there's that. We can tell contractors till they're blue in the face. You get no money at closing. You have to do this. I swear that loan closes, and the first question is, when do I get my check to start? Like, great. So bids, I don't have to spend a lot of time on this, but a contractor, when they give us a bid, it's just broken out between material and labor. And we determine that not because we're being nosy, because we can usually give a material draw at closing. So we can't do that if we don't know what they're paying for materials. When they give us our bid and they close that loan, the amount of money that they have stated that work's going to cost goes into an escrow account, and that's where the draw schedule is based off of. Not to take a corner, but every renovation loan runs the same way when it comes to post-closed draws, except FHA 2 or 3K limited program. We, right now, it's a maximum of $35,000 for the total renovation cost. They will receive 50% of that at closing. They can receive the other 50% after the final inspection is done. But there's nothing structural you're allowed to do with it. It's all like repair and replace type repairs. Starting November 4th, part of the new change, that goes up to $75,000 from $35,000. You can also currently, they cannot hire a consultant and get paid through the loan. But after November 4th, they can hire a consultant, basically be on site. And I'm going to talk about what a consultant, so next slide. What a consultant does. Richard was nice enough to come here today. I'm not going to ask him to get up and talk, but I want everyone to understand. You may say, he's a HUD consultant. What does that mean? Richard wears a lot of different hats. He's actually I'm not trying to beef him up, but he truly is probably one of the best consultants we work with on the national level. Not a lot of them out there. We need more. And he really is he's top notch professional. We don't need more here. Yes. The place is small enough. Don't need that. So anyway, so what does a HUD consultant do? On a 2 or 3K standard program, it's mandatory. You have to have a Richard on site. Now, he will basically do a work write-up. It starts off with a 35-point breakdown of an inspection of different, whatever you're doing to that home, the needs and wants. He also is with your client all the way to the end. He's doing every inspection. He's making sure the contractor is doing what they're supposed to be doing all the paperwork that you were talking about earlier, to help them get paid. They also, now with the limited, go out there and perform the, what do you do? Right up or stuff? I usually do. Easier for me. There is one thing that we don't talk about, and I think it's huge, it should be in your market, is a feasibility study. Anybody heard of that before? Feasibility study? If you have a client, someone's interested in the house, you know there's going to need to be repairs done. You have no idea what needs to be done. You don't even know what they're going to cost. You could hire consultants to go to the house, and if I say this wrong, do a feasibility study, which is basically a walkthrough to show you what the minimal property requirements are, what the approximate cost should be for that, and you go approximate cost, you take the highest, something like that. So in other words, client can walk out of there and say, all right, I know we're going to offer X on this house because it needs $30,000 in repairs being done. Because it kind of gives a easier way to do that. And if they end up put a contract in, they get approved for the contract, it moves over to a full work write-up. They get a credit back for whatever the feasibility study costs. You typically charge a feasibility $500. So $500 for a feasibility study. Most work write-ups, full work write-ups are anywhere from $700 to $1,000. Answer that if you want. Are you a home inspector as well? Yes. So how many times you walk into a house as a home inspector and you walk out as a HUD consultant?
A lot, actually. It happens a lot. It's redundant, I'll tell you that. Typically, a HUD consultant work is not a substitute for a home inspection. And it varies, like on a home inspection, opening multiple windows, testing multiple outlets, just as an example. For a HUD loan, I don't have to do that. Like working windows, screens, the FHA requirements are into wiring, things of that nature. So it's a little different. But honestly, as a HUD consultant, I'm looking at 90%.
I always say my answer to that, I wanted Richard to answer that, but I always recommend to people if they have a house that they think is going to be a little shady, or if they know it's going to be a renovation loan, find a consultant, or we prefer one to them that we also know is a home inspector, because they kind of wear two hats, and they're going to look at that property in a different manner than just a home inspector in general. Because he may walk in being a home inspector, and realize, wait, they're gonna be able to buy this house, has all these minimal property requirements, and that's when I say you walk out as a HUD consultant, say, this loan's not gonna work for you. I personally think everyone should find the largest investment of your life, should get a home inspection done. Even if you have to pay for a HUD consultant as well, it's additional money, but it does protect you. That's why I always say, find a consultant that is also. So consultants, they're good. Sometimes I think you guys get a pet name for yourself, because it's like, oh, it's just this extra hand in the pot. And it's really not the case. Especially if you have a client who's maybe not too familiar with renovation and construction, and they just don't feel comfortable in that zone. That's where someone like Richard can come in and really help them and make them feel a lot more comfortable with the whole process. The appraisal, there's a lot on this screen. There's a big sun on this slide. The appraisal, hands down, is the most important document for most loans, but any renovation loans, hand down, because until we have that appraisal in hand, we really don't know, number one, obviously what the value is. We don't know if there's other repairs that are being called out. So sometimes even when you get an appraisal back, some appraisers go to itemize out some items that they're calling out as minimal property requirements, but sometimes they take pictures. So what we typically do, we get an appraisal back, we review it for value first, we put it directly into underwriting. Within 24 hours, it's usually reviewed. If there's any additional repairs needed, we go back to that contractor and say, hey, you have to add this to the bid to make sure that's it. So the trick, I always say, to successful renovation lending is to order the appraisal as fast as you can, but also order the appraisal properly. One of the differences are on a normal transaction, yeah, you have a sales contract, you're going to disclose a loan application, you're going to order that appraisal right away. We can do all of that except order the appraisal right away, because since the program is based on a subject to value, the appraiser doesn't know what repairs you're doing, they don't know anything about it. So we have to at least get them some sort of bid so they know what they're looking for. Remember, technically we're saying we don't care about the as-is value. What's this house going to be worth after these repairs are done? So depending upon what repairs are being done, can also take some time onto that. I'm gonna circle back on that in a second.
Having, as a real estate appraiser and having done dozens and dozens of 2 days, I'm always presented with the consultant's information before I know the value.
Yep.
I lost my X-ray vision years ago. So when I walk into a house, if I don't have his paperwork done the complete inspection, I can't see through the walls. I'm not climbing up through the attic to find every little nook and cranny to meet HUD FHA requirements. So I go by his, and it always has a number on it.
Yeah.
And it's like what the value of the house is, as is, used to be important. I used to do 2 appraisals, an as is and an as.
Sometimes you have to do that brief by city.
Mostly now, it's just the as completed.
Yep.
And the document that he produces is much more valuable than my inspection.
So he hit the nail on the head. We just said that. You can, if you say, here's my contractor's bids, and they're like written on napkins, or you can't understand it, or like an appraiser can't really give a good value onto that property. So the trick is make sure, unfortunately, not every transaction has or needs a HUD consultant. So we always say, if you don't have a consultant, we work with the contractor to break it out, because any underwriter or any appraiser should be able to read a bid and visualize what they're doing. What's the square footage we're adding? Are we changing the floor plan, the footprint of the house itself? So they can determine, they got to find comps. You know, they say, Boss's X-ray vision, that's good. Boss's X-ray vision a while ago, how are they supposed to find comps, give proper value? So what happens? It's like garbage in, garbage out. We're going to give the appraiser garbage bids. Now all of a sudden the house under appraises, everybody's upset. And so it's such an important key. And if you can do the work up front to get us that information, it makes life so much easier. Homeowners insurance. This is kind of a new, I did never really talk about homeowners insurance, but it is kind of important when qualifying, and I want everyone here to understand. So typically in a transaction, you're going to get a normal HO3 policy. know what the premium is, we split it, we divide it by 12, that's what they're exposed in their escrow account and how we qualify them. This isn't a lender rule, this is an insurance company rule, will come to us and say, you're doing a renovation loan, we're not going to issue you homeowner's insurance policy, an HO3 policy, but we will give you a builder's risk policy. And essentially what a builder's risk policy, it's usually a temporary 6-month policy that's paid up front. So if it could cost you $1,000, well, that's money that the borrower needed to go to closing. So we need to know that up front so we can, not all of a sudden they're going to need more money, the day of closing. So what we also do is ask them for a quote, an HO3 quote, after the work is done, and that's what we're going to take that premium and qualify them off of that way. So if you have a renovation loan, don't wait till the 11th hour to get homeowners insurance. Really have them start pricing it out early in the transaction, because if they do go with builder's risk policy, it could help really define the bottom line a little bit easier. Getting back to what you said earlier, closing timeframes. I laugh when people say, "Oh, we close 2 or 3 loans in 30 days." Like, no, how fast you can close any loan, you can't predict the future. I have plenty of loans to be closed in under 30 days. I have mostly for around 45 days, 60 days. I tell people, depending upon what they're doing, if they can get a 45 to 60-day contract, they're probably safe. We will know if you got a 45-day contract, you're not going to find out on day 44 you're not closing on time, because there's something going on prior to that that's not going to allow us that. All parties will be aware well in advance. I have some that manage to sit around for 3 months just because there's issues with title or contractors or repairs come up, foundation issues, and wait for a structural engineer, whatever the case may be. I always say this. I kind of give this example. If you came to me and said, I have a borrower that wants to put a new a new roof on their home, how long do we close it? And just give me, you could probably stand on your front lawn, call a roofing guy, come out to your house, they can have it on in 2 weeks. So it's not going to take any additional time. If you say that guy wants to put a roof on and a 2,000 square foot addition, well, that's not going to be done in 30 days, because you're not even going to have like plans and specs and all of the proper contractors bid probably for a couple of weeks while they're trying to figure out what you're doing. So a case like that, yeah, don't say we're going to close these in 30 days. Do we want to? 100%. But we're not going to set you up for failure. There's just no way. We can only go, we're underwriting 24 hours or less, sometimes same day. Everything we touch is usually the same day. Our holdups, contractors, and appraisers. Not because they're slow, they just have work they got to do. They got to go to the house, they got to read, like you say, you got to read plans to assess the value. It just takes some time. We just don't want you setting yourself up for failure, promising a 30-day close on a big $100,000 renovation. It's just really hard to do. Oh, we're almost done. So I don't have time. Post-closing, this time, I'll only put this on here. All of you really aren't involved with any post-close issues or concerns at all. But you should know what happens. After the borrower goes to a closing table, they're going to start construction, what happens. And typically, the contractor, the borrower is going to get some sort of material to draw closing, disperse any permits. They're going to go start working on that house immediately. And they have usually anywhere from 6 months to 12 months to have the house finished. So depending upon the type of program it is, depends how fast it gets done. When the final disbursement is made, hey, I want my final draw done. If there is a contingency reserve, you're asking about that, I skipped over that. Do we know what a contingency reserve is? You asked a question earlier. What happens if the unknown comes in? We're going to collect 10% of the repair cost that goes into, it's financed, that goes into the renovation escrow for the unknown. So for instance, we have a detailed bid doing, this is our specification of repairs. They open a house, they open a wall up, oh man, it's a bad electrical, whatever the case may be, we have to get this done. Who's going to pay for that? It comes out of the contingency reserve. So there's usually 10% of the repair costs that's set aside for it. If it's more than that, unfortunately, the borrower's got to figure out where that's coming from, because we can't, loans closed, no additional money there. If the contingency reserve is not used, or maybe all the inspections aren't used, or whatever the case may be, the additional money that's in that escrow account is given back to the borrower as a principal reduction. The loan is closed out and they're free to go refinance or do whatever they want.
Can you re-amortize the loan after that is applied to the principal balance?
Like a note modification.
Yeah.
Kind of deal now, because these are actually one-time flows, like 30-year fix, so they could stay in this loan forever and ever if they want. It's very common for them to refinance though after it's done. It's a second step, and I agree with you, a loan modification probably would be easier.
It's like a full.
Yeah. They just can't do that. So fortunately, they got to go through a refinance. Yeah. But sometimes it's good to, like, we've had people go to a 2 or 3K loan, they're only 3.5% down, and they've had literally immediate equity. By the time they're done, they could be at under an 80% loan to value, and then we'll refinance them to a no MI conventional program like that. So it's kind of beneficial sometimes. The amount of equity you find in some renovation properties is, my kids, I finally get to that age with my oldest about to buy her first house. She'll be looking soon. She's got a real adult job. I'm like, go look at foreclosures and do renovation, whether you want to or not. Because trust me, I've closed first-time home buyers have like $100,000 in equity. You may not live in an area you want to, or be somewhere for a year, but definitely worth it. That's it. So this is a screen of just PRMIrenovation.com as a website that we kind of have. It kind of, you can go in a little bit more detail about certain products and programs. Do you have any other questions about the Dog and Pony Show? Yes, because she asked, you need permits before closing. They don't need them before closing. What happens is contractor usually state what they're going to cost for the HUD consultant will. They have to obtain those permits and submit them before they'll be able to get their first draw. Technically, by law, they're not supposed to be working on a house without it. That's also the reason what delays the product. So talk about, do you have a time frame? I've had some counties, man, they take months, like literally months to get permits. Everybody just kind of sits around.
So the contractor does get money up front to start the renovations, or?
Depending upon the product, they'll always get the
Okay.
permits up front.
Yeah.
Depending upon the product, they usually will get, the max they'll get is going to be 50% of material.
Got it.
Sir,
Can we still pay FHA 203A? Just a commercial 5-unit, 6-unit. I have 20% down. Buy it and take the renovation money, take the 5th unit. Now it's a residential property, but
as long as it could be zoned residential, 100%.
I used to do it back in the day.
This day was a lot longer than most days.
We actually, I just closed the loan last month. There was a church and they turned it into a residential property. So that's, as long as that property can be zoned residential, yeah. Crazy stuff like that all day.
Doing it 10 days.
10 days out.
You say that you charge $500 like for doctor, would recommend that in tandem with the inspector? It just sounded to me, Greg, that you were saying that the loan is through either.
If you want to, that's for a feasibility study.
Correct.
So you don't have to have a feasibility study
But
if you
like,
don't want to.
$100 to me, when you're talking about $500,000, and let's face it,
Yeah.
we're talking about $500,000 at very little, would that be a good allocation of funds that we should tell our, you know what, reach out to Richard Aubie, because if we have the inspection and we also have Richard's report or whatever HUD consultant we use, would the loan go through smoother? Would you recommend? Especially since it's going up to 75,000 now.
Yeah, in my opinion, yes. And as a home inspector, I get asked at the end of the inspection, what do you think of the stuff that you
Correct.
inspector can't answer you? As ridiculous as that may be, as a HUD consultant, I have to figure that out. So you're getting, it's really the need for information. And with a rental, you want to know cost rather than just an observation. So,
And the cost
Yeah,
is, here, 500, is that what you charge?
Yeah.
To me, that's a good allocation of funds so that, you have all the information up front, because let's face it, there are needs and there are wants.
right.
I have some clients come to me like, I want a pool, I want a hot tub, I want Korean, sandstone, and I'm like, yeah, you don't have electric? So that's the biggest thing. Like, it needs to be safe, sanitary, and sound. We need to figure that part out first. So to me, $500,000, that's kind of their skin in the game. It may not be a niche product, as you said, but to me, that would be a good thing to recommend.
They're gonna invest in that, you're gonna see if they're serious. And that goes, there's an additional cost or different cost for a full work write-up. So yeah, if we did a feasibility study, that feasibility study credits towards that work write-up, because the beginning is pretty much done. So I think it is. I mean, the difference is there's a lot of borrowers themselves come in all shapes and sizes. We have some that come to us. I mean, here's our, they might be contractors themselves. Here's my bids. They understand. They don't need help. They don't even want to talk to Richard. They think that none of us know what we're doing, and they're going to run the show. We have other ones that be like a single person who just doesn't like renovation, but they want a house and they need that hand holding. They understand, so we've thousands, I said, we used to suck anymore. Thousands of loans to get to that particular point. One other thing, if I can just on primary, from the very beginning, when I stated earlier how we had one product and we sold it to Bank of America. Through all of this and now offering all agencies, we are 100% in-house. Why is that important? Because if your client has an issue, or there's an issue with their contractor, an issue, just something that's going on, they can pick the phone up, not only call you or yours, they call me directly. They can call, we've set up our plan. We had a vendor, very aware of them, that he would have to go through to get paid. It was a nightmare. Through time, we realized that was one of the learning experiences. We have to bring this in-house. So we have full staff that will call back anyone within 24 hours or less if they don't answer the phone already. And that has been probably the largest game changer to date since I started doing this content. So they're not selling your mortgage out to deal with someone else that doesn't know what they're doing. They're going to deal with us until that final inspection is absolutely done. All right, I think that's it.
Greg, can you just reiterate changes November 4th?
Yes.
5 to 75.
So on November 4th, the biggest changes are come to the 2 or 3K limited program. One, they can finance, they can hire and finance a consultant if they want to. You can hire a consultant, but you can't finance it. So if you want to pay for one, that comes out of their pocket. They can't get reimbursed. Two, the minimal amount just got raised from $35,000 max to $75,000 max. I said I wasn't going to talk about program details too much, but let me explain the difference. Two or three, FHA has 2 renovation programs, a limited and a standard. The differences between the two, the limited program cannot do any structural work, and you can't go over that $35,000 mark. So if you have, and that's tight, because sometimes you have a bid or you get appraisal back, and all of a sudden it's at like 37,000. Like that technically would have to turn into a standard. That's what no one likes, Richard. Now we got to hire a consultant. They got there's a whole different draw schedule. So now that 35,000 is turned into a $75,000 limit, which is huge. So they probably went so high. They say they're going to monitor it every year to see, but I mean, it went from I think 8,000 or 8,500 originally to like 12,500 to 35. Now it's 75 through the years. So they're probably going to set it and they're not going to touch it for another 20 years. So that really, really helps out, especially when you're, they have longer, I think before it was 6 months to do all the work. Now I think they have up to 12 months to do it. That's it, unless you know anything off the top of your head. But all in all, that's the biggest thing, is that the limited amount going up to 75,000 is huge. But the bigger thing, let me say that also, it comes with a little bit of a rocky boat, because if you have a contractor on a limited K, they get paid up to 50% at closing and the other 50% at the final inspection. You have a contractor, they hey, great, here's $30,000 at closing. And they fund the rest of that project because they're not getting paid again until everything is done. So we have to make sure this program works much better with a solid contractor that has deeper pockets that can understand finance. Not to put down the handyman guys, or I'm friends with a lot of handymen, they do great work, but can they fund $100,000 project? That's the biggest thing. They may not be the right person for a smooth transaction all the way. Did I answer you? Good?
Thank you, Brad.
Thank you.
Now, one more announcement.
Thank you all for coming today. Thank you, Greg and Richard.